All right. So let me recap. We're going to say you weren't long here. You were just waiting for a wall. And that was a big bullish wall. Right? Buyers came in at this point and brought price all the way up here in just a week and a half. And then price came back, held exactly the 618 level, right in that zone. Gave us a buy setup. Came up, did not make a higher high. Came back down to the 618 level. Another chance for long setups. Held the 618 level 1, 2, 3 times, and then rallied into fib resistances. Okay. Guys following so far? And then now at this point, I've got 15% of my buys, right? If I have $1,000, I want to put into Bitcoin. I got 150 scattered throughout this area. Maybe some in front of this fib level, some in front of this fib level, some in front of this one. And then the rest of my position, I'm waiting for another higher low in front of here or another higher low in front of here. Okay. And we'll see what we get here. All right. We get continuation. Okay. So that first buy off the 382 level, I can be looking to book some profits. Okay. Now we'll switch over. You got to constantly be thinking about where could my trade go wrong, right? So it's great that this is a buy setup, a big bullish engulfing candle off of a continuation 3.82 fib level. So that could be a higher low, just like this one, right? You just barely made a higher high right here. Only one close above it. You didn't get the second close, so no follow through on the second day. So if this is going to continue and make a higher high, just like it did there, then this is going to be the low of this move, right? I know that might not make sense, but just try and follow along here. All right, so we'll do a fib from the top of the pump to the bottom of the dump, right? And then we watch for a rejection at the same three levels, right? The 382, the 0.5, the 618. And there we get it. This is a bearish engulfing where price takes out the previous candle and it gets follow through. So at this point, you've attempted to break out above a key resistance, and then you dumped right after. And then when the buyers attempted to do that again, they got rejected right here at a key fib level. So that might be a sign that these buys I had in front of the 382 level, I'm going to book those profits now. And I'll keep my lower bids in case we break down, in case this lower high is going to take us further down. All right, and that's exactly what happened. Okay. So now at this point, maybe you've got a couple more buys in front of, maybe you had a buy hit in front of the 0.5. Maybe you've got one more small buy in front of the 618. And maybe the profits that you got from this move, maybe you'll put that down in front of the 786, right? Just to have a lower bid in case she breaks down further. Right? She holds shortly at the 0.5 fib level, breaks completely through breaks through the last two levels, the 618 and the 786, and goes all the way down to the bottom of this higher low, right? And then collapses even further. So this is exactly what I was talking about earlier. Right? So this is the point where the market stopped putting in lower lows. We only know that right now because we've moved away from it, right? We know that was the point it stopped putting in lower lows because we can see the future chart history. But at the time back here, right, we didn't know that this was the low of the low, just like there was no reason to think this was the low of the low, right? Who's to say that wasn't going to break down and take price back to some other level, right? Who knows, right? So at this point, we're watching for any higher low at all in front of here is still valid. As long as it does not make a lower low, the trend, the downtrend has stopped. You've entered a trading range now, right? This transitional phase where it's either going to transition into a bullish trend or it's going to continue the downtrend, okay? So this downtrend is stopped as long as we remain above this level right here at 171. And we'd like to form higher lows at any of these Fibonacci levels. But again, it doesn't have to be at those levels. It can be anywhere down to here. It was nice to get a higher low off the 618. Could have made some good money on that move, right? Book some profits into the highs, right? Add back at the 618 again when you get a setup. Book some more profits into the highs. Maybe you're adding a little bit back on the way down like we talked about. And then this higher low right here gets run. So if you had a stop loss below this higher low, you would have gotten taken out right there. But the uptrend, or not the uptrend, sorry, this low was still intact. All price did was come down to your last fib level at the 786 and make that final higher low, right? So that is still a higher low relative to the bottom of your trend, right? It's a slightly lower low comparatively to these higher lows, right? But it's still a higher low relative to your trend. So even if you get stop run here instead of having bids, it's totally fine. You do not have to catch the bottom. We're just trying to trade the ranges. Trade the middle ground, okay? So at this point, you've bounced off a bullish fib retracement. We get buy setups. And now, after we have dumped from this resistance, when price attempted to make a new high, we will use fibs again to watch the retracements, right? And what do you know? The first place it stops, the 382 fib. That's why you always book a little bit of profits at that fib. And then if it comes back down to your entry, you can just add more. And it doesn't come back down all the way, but it does come back down to your other fib level, right? And then we get our buy setup in the model, and boom, you bought some into here, take some profits, add it back, adding and reducing. Take some more profits into these levels. You don't get a chance to add back, that's fine, because you keep your majority of your position with the trend. The same way I'm only buying a little bit on the way down into fib levels, I'm only selling a little bit into fib levels. I'm going to keep my core position in the market until the market takes me out. And you guys will understand what I mean more when I go into stop losses. But this let the market take you out concept will really help separate your emotions from your trading. And that's very key. All right. So now we'll go through. Now, a bull market is insanely easy, okay? Sorry, I don't want to make it sound easy, but compared to trading in a bear market, it really is, right? So now that we've switched, like we saw in the SR support resistance video, price switches from making lower lows and lower highs to making a higher high, right, relative to these lower highs, and higher lows, right? Higher low. And then this old resistance gets tested and turned support. Now, you guys have any idea just exactly where that might have happened? Well, let's look. Let's look at the bottom of the higher low. Okay, the bottom of this dump, right? To the top of the pump, the top of this higher high, right? This lower low. Oh my gosh, I'm sorry guys, I'm speaking all over myself. This higher low is what led to this higher high. Okay, so that's why we use those as anchor points. And look where price landed. Boom, a buy setup right off the 618 FIP level. Isn't that amazing? And then after breaking through it, it goes right to the 382 level, retraces to the 0.5 level, and then pumps all the way back up to this, what is it? This higher high. Now, in the same way that we want to book gains into that, you also want to be booking gains into this high. Even if you're going to break it, you want to be taking some profits off, just like you do at the fib levels. It's just smart profit taking in case you get back to your entry, right? And then what do you know? Price does come back to, not quite to your entry. I don't think so, no. At this point, we can start using different fibs, right? So you bounced at the 618 here. And then on the next move, you hold again at the 618 twice, right? And then on the next move, you hold exactly halfway right there. And then you slowly grind and grind and grind until you make a higher high, right? I know it's just a lower high relative to here, but it's a higher high relative to here, short term. So now, right, we've made a higher high and we're making higher lows. We want to see if this is going to continue, then we're going to make another higher low in front of here. Right? Let's see what happens. Boom. Higher lows right off the 382 level, right off of it. Just perfect. And price flies up again, and we'll do the same thing we did with this pump. Okay, we'll use the bottom of the move, right? Price made higher low, higher low, higher low, higher low. So we'll use the higher low that led to the higher high. Oh yeah, look where price holds. 618 level. Has those stops get run. Happens quite often. And then it just grinds its way through, right? Right to the 0.5 level. Right to the 382 level. And then all the way to a new high. Right? And guess what? We can just keep doing this, right? Bottom of the dump, top of the pump, holds at the 618 level. Bottom of the dump, top of the pump, holds at the 618 level. Bottom of the dump, top of the pump, holds halfway. Right? Bottom of the dump, top of the pump. It's getting catchy, ain't it? Holds at the 618 level. Bottom of the dump, top of the pump. Holds the 382 level. Now this is interesting, right? Previously, we were holding the 618 and the 0.5 levels, but you remember what I told you? An extremely strong trend will only hold the 382 level. Now, what does this mean, right? The buyers have taken this all the way up to a new high, and when the sellers try and push it back down, the buyers are so aggressive that they don't even let it get halfway down the previous move up. All right, and that shows strength. Getting a buy setup off of that level is huge. All right, and then what do we know? Bottom of the dump, top of the pump. Right, at this point, that was top of the pump. And again, price retraces only to the 382 level because that's what an extremely strong bullish trend holds. And that was, I mean, look at this, guys. This is an extremely strong bullish trend. Okay. And then we get one more move up. Bottom of the dump, top of the pump. And price breaks down. Only after, here, wait, let me get rid of some of these and zoom in here. Right? So at this point, you've just been making higher highs and higher lows. Right? And then at this point, you retrace here, right? You make a huge move up, you retrace a little bit, you make a higher high again, and then you take out this low just barely on the intraday, right? This is a daily chart. So that means at some point in this day, price came all the way back down and was bought back up above this potential support level, right? So at this point, you might be getting careful. You're getting a little worried. You've been using fibs to look for support because you're in a bull trend. But now, with the possibility of a lower high maybe coming into play, right? You made a lower low. What would switch you to a bear market? A lower high. Or not even necessarily a bear market, just a downtrend, right? What is going to continue this? If we're going to get a lower high, then this is going to be the absolute top, right? It might not be, right? It might just blast through it, and that's totally cool because then we can buy the retracement of that. But if this is going to be the end of it, it's going to make a lower high somewhere in front of here. So what can we do? We can use a fib, right? But instead of going bottom of the dump, top of the pump, we're going to use top of the pump as our first anchor and bottom of the dump as our second. Okay, that makes sense. And then same thing, coming back in, we're going to be watching for rejection at the 0.5, the 0.618, and maybe the 0.786 if it gets there. But if it gets there, I might be starting to think that we're going to be going further up. But what happens? Price gets rejected exactly at the 618 level and breaks down. Sorry. Price gets rejected exactly at the 618 level and breaks down further. And at this point, you know, all right, I've made a lower low after a lower high. We're now in an intermediate term downtrend. So at this point, you're starting to watch to get rejected at lower highs, just like we just did, right? So then when you have this next down move from this lower high to a lower low, you're doing the same thing. All right, you know I'm about to stop this video. It's getting to the end of it because I'm speaking over myself all the time now. All right. Hopefully you guys don't mind. You can keep following. But now that we've entered this kind of intermediate term downtrend, we can see a strong downtrend rejects price at just the 382. Just like back here, we saw a really strong uptrend hold at the 382. We can see really strong downtrends face resistance at the 382. Okay. And then you really just keep doing the same thing, right? Now we go from this area, this lower high, down to here. Okay. And we're watching in the same zones while keeping in mind like if we were to pull up a weekly, this is all one big leg down, right? So bigger picture, you're watching all these levels whenever we come back up, and we still have not come back up this far, but in the future, when we do come back up here, we have to watch all these key levels, right? Because what do we know? A strong bear trend will get rejected at the 382, 0.5, or 0.618 levels. And boom, double rejection at the 382. Very bearish sign. Honestly, the pretty textbook bearish right there. Okay. And then you get a nice bullish setup. So potentially you've made a higher low in front of this low. All right. So now we're going to watch and see if price can make a higher high, which means getting above this level. If it's not, if this bearish market is going to continue, it's going to make a lower high anywhere in this 382 to 0.618 fib level. And what do you know? Right at the 618 rejected. All right, price comes down again. We're going to do the same thing. Top of the pump, bottom of the dump. Boom, right at the 618 level, rejected again. Price dumps again, same thing. Rejected halfway. And then a breakdown, okay? Multiple rejections halfway or at the 618 level into lower highs led to a further breakdown, okay? And so I hope through all this, you guys have started to see just how important Fibonacci's can be. But if you're still not feeling too used to them or you feel like you haven't seen them enough, do not worry one bit, champs, all right? I'm going to be using these in all my videos. So just keep on watching, keep on trucking on, and I'll see you guys in the next video. Peace.